Hey guys, Tyler here. Welcome to another video. Today, I'm going to be sharing with you the cracked code of one of ICT's unspoken, unshared models that he recently shared in a video right here. Now, full disclosure, I have not spoken with ICT. He has not given me any information on what this model is in any capacity. And everything that I'm going to share with you is based on my own backtesting, based on clues that ICT has dropped in his videos that I put together some rules, and I went and backtested it. And I'm going to share that with you today. Now, ICT, if you're watching, give me a like, give me a thumbs up. Let me know your thoughts. If we're anywhere close to what your model is, I would love that. It would be fun for the community for you to share that. But with that, let's go ahead and jump into the video. Okay, folks, so here we are on the screen. Now, if you haven't watched the video that ICT on his executions of this, I highly recommend you go and watch that before you continue on with this video. I'll put the link down in the description of this video so you can check out. He doesn't do any teaching. He's basically proving to us that he's a man among boys. And we're going to see if we can put this together on potentially what that model may be. Now, here's what ICT is stating in his video, is that the high was put in right here. That when price comes back up into this level, he was confident that price was not going to move higher. In fact, he had a stop loss that was, I believe, like 5.5 handles. He had it was like right there. Yeah, that's pretty much what his entry was. And he held this move as it moved lower, and it came within a tick of where his stop loss was. Now, here is where he set his stop loss. At the midpoint of just above the consequent encroachment of this wick right there. If I zoom in, that is where he set his stop loss, right at that level right there. Why was it this candle? Because this is the third candle that framed the inversion fair value gap right here. Here's candle 1, 2, 3, midpoint of the wick, just above the midpoint of the wick, and that is where I believe he set his stop loss. Now, here are the rules that I put together myself, that I wanted to backtest myself to see if in fact I can replicate this in past price action. Number one, I wanted to see algorithmic delivery towards the low of day or high of day after 2 p.m. So you can see right here, here's the 2 p.m. macro is right around this area right here. And we see algorithmic delivery, basically very aggressive, intentional move higher above this high of day sitting right here. The second thing that we are looking for is we're looking for the sweep of the low or high of day in or around. I'm a little flexible because I found one example where it wasn't within the 3 p.m. macro. The 3 p.m. macro for me is between 2:45 and 3:15. You'll see that referenced by this orange box right here. Rule number 3 is that the high is officially in once we see an inversion fair value gap created. So in this case, we have a fair value gap right here. But as soon as this candle at 256 closes below this fair value gap, it's now turned into a inversion fair value gap, and we should see the high set for the day within the 3 p.m. macro. Now, this would infer to us that the high of or low of day is taken, and a stop at this high should not be taken. And we can see that in the example he shares in his video, that is the case. Now, we're going to go through, I think, 4 or 5 examples that I found where this happens exactly. And there's a couple that happen outside of it, a couple that don't happen with it, and we're going to go over those just so we can get familiar with what this could look like, and for you guys to study and backtest yourself to really bring this to the community at large. So let's go ahead and take a look. One thing you should need to make sure is he referenced regular trading hours in that video. So I put on, you'll see at the bottom of my screen, regular trading hours is set for us to do this backtest, okay? So let's go ahead and let's see what we can find here. Here's the first example that we have right here, okay? Here you can see our regular trading hours begins here and ends here. We see algorithmic price delivery price spooling lower, we have our 2 p.m. macro right here. And then during that 2 p.m. hour, we see price spool lower towards the low of day. Low of day is now taken. It was also taken and set inside that 3 p.m. macro. We have our first inversion fair value gap right here, and now the low is set for the day. There's two ways that I went and I studied this, because not every time did we have an inversion fair value gap, but every time we have an expansion candle, displacement candle that leaves a fair value gap. And in both cases, we see this fair value gap come back to and tagged, and then we see price aggressively move the other direction. So you could take your long based off of this fair value gap here and moving higher, setting your low at the low or mean threshold of the candle framing this. So in this case, that mean threshold would be right here, that middle. There's your mean threshold of this candle framing this fair value gap right here. Price doesn't actually come and touch that, so it's safe. And then it moves higher. Here we have our first inversion fair value gap right here. We see price break through it and then come back and tag it right here. And then guess what it runs for? It starts running towards liquidity. Now it runs out, closes before we actually get there. But I would be curious for you guys to see if it actually runs these highs in the post market. Let's go to another example. Here we have an example right here. Here is our opening price, and our close price for the day was right there. We see price taken. Okay, so here is, look at this spooling of price right here. This is during the 2 p.m. macro. So a little flexibility in this, where we have the 2 p.m. macro running, runs, takes, creates a low, 2 p.m., and then during the 3 p.m. macro, again, a spool lower to create the low of day. And then we have our inversion fair value gap created. And then I've also marked out our first fair value gap. So we can see the first fair value gap finding support right here and then moving higher towards these highs. Opportunity 1, opportunity 2, price comes back down aggressively into this inversion fair value gap and the first fair value gap created after the low was put in during the 3 p.m. macro, and then price aggressively moves higher towards the end of day. Now again, none of this was shared to me by ICT or anybody in that matter. This is just me doing backtesting, speculating myself, and trying to see if we can put a model around this. But we have a few more examples to check out. Let's look at another example. We have another example right here. Now this does not happen every day. I think I found 5 or 6 over the course of 3 or 4 months. So it's definitely something that you just need to see the algorithmic price action, the spooling of price that triggers that, hey, we may see that 3 p.m. macro low of day set. And here's another example, but it happens just before the 3 p.m. macro. Okay, look at this price action right here. To me, this is very algorithmic, very systematic, very intentional. This is 2 p.m. We move higher, we grab liquidity, and then we aggressively move lower. We consolidate a little bit, and then right before the 3 p.m. macro, we create the low of day. Now, in all cases that I've seen this, we create the low of day before or during the 3 p.m. macro, but I've never seen it after from the examples I'm sharing with you here today. We see the low taken, sweep of liquidity. We see our first inversion fair value gap and our first fair value gap created. Price comes into that fair value gap and then runs for the high. Price again comes into the inversion fair value gap, does not, I repeat, does not run the low of day. And if we find out the mean threshold of this first fair value gap that frames the inversion fair value gap, it does not run that low or that mean threshold either. In other words, you could set your stop right at this mean threshold of that candle framing this inversion fair value gap, and your stop would be safe. and then we move higher into the close of the day. When I saw this one in particularly, I was like, man, I think we may have something here. And that's when immediately I'm like, okay, let's put this together. I'm not going to try to say I have the edge on the market, but I just want to share it with the community to see if this is something that would improve us as traders. Let's go and take another look at another example here. Now, this is very interesting here. This example here validates my idea that the low of day is set, and if it doesn't happen, the low of day is not set. Okay, this was another one that just grabbed my attention. Okay, take a look at this delivery and price. Okay, we see from 2 p.m. price moving lower towards the low of day. Now, during the 3 p.m. macro, which I have outlined right here, guess what we don't do? We do not take the low of day, but in fact, we run higher. And then after the low of day, after this retracement, price then runs lower after that 3 p.m. macro and then runs and potentially makes a low of day. So my thought was, well, if we create another low of day after this 3 p.m. macro, does it mean we may see lower prices? And the fact is, I think it is. I think that's the case. Look how we run lower further after we create this low of day after the 3 p.m. macro. What I'm trying to say is I think that when the low of day is taken specifically within the 3 p.m. macro or even slightly before it, I think that is the signature in price tied together with the spooling of that 2 p.m. hour that the low of day is created. And we see when it happens after the fact, it moves lower. Now, again, I would love for you to go back and test this. Find out, share with me anything that you think is wrong, right, any changes or any addition to rules. I'm not saying I have this figured out. I just want to share it with you guys. Let's take a look at another example. Okay, here's another example of the high not taken during the macro period and then taken after, and then it moves higher. Again, multiple examples to give validity to this potential idea. So we see around the 2 p.m. macro, we don't see spooling of price. I would not call this spooling, but we do see it moving towards the high. But the high is not taken during the 3 p.m. macro. It's taken after the 3 p.m. macro. Then we see a retracement, and then guess what we see after this? It's like it knew it was going to move higher, so it avoided taking a high during the 3 p.m. macro, took the high after, and then spooled higher. I don't know. I'm just saying, I'm just sharing it with you guys. ICT, if you're watching and I'm relatively close, let me know. Okay, here's another example. This is the one example where the low of day is created prior to macro time. We can see the low of day right here, noted by the X, and then we see a spooling of price lower. See how it's consecutive black candles just spooling lower? This is during the 2 p.m. macro. Now, we create the low of day around 2:30, 2:25. So I marked it out anyway. We have the inversion fair value gap right here. And then we have our first fair value gap that's created right here. We can see that when price inverts this fair value gap, it creates the inversion, signifying the low has been created. We have our first fair value gap where we can find support in and a move higher. And look how aggressively it runs the other direction. So I don't think I have everything figured out on this, guys, because this actually happened slightly before the macro. But you can see we don't even relatively try to move back down towards the low of day, even when this was put in around 2:30. All right, so there we have it. And again, ICT didn't share with me. This is just my speculative insight that I wanted to share with you. I would love for you guys to put in the comments below this video on any additional insights that you may have, any mistakes that I may have made in this analysis, but wanted to share with the community. So if you like videos like this, consider liking, subscribing. Thanks for watching, guys, and we'll see you in the next video. Take care.